Hello, friends. Welcome back to the channel. A few months ago, I had to remove this audiobook due to some unexpected issues, but today I'm beyond excited to bring it back to you. Rebuilt, reimagined, and more powerful than ever. This is Trading in the Zone by Mark Douglas, one of the most life-changing books ever written on trading psychology and mindset mastery. In this new version, I've covered every important concept, every key idea, every quote, and every lesson that can transform the way you think, act, and feel as a trader. I've poured my full energy and emotion into recreating this audiobook so that every word connects deeply, every message hits harder, and every moment feels real. Whether you're a beginner or an experienced trader, this book will change the way you see the market and yourself. So sit back, relax, and let this audiobook take you on a journey, not just through the markets, but through your own psychology. By the end, you'll understand what it truly means to trade without fear, without hesitation, and fully in the zone. If you find value in this audiobook, don't forget to like, share, and subscribe to the channel. It really helps me continue creating more powerful content like this. And trust me, what's coming next will be even bigger. So now, my friends, let's dive deep into the mind of a trader. Let's step together into the powerful world of trading in the zone. Written by the legendary Mark Douglas. Chapter 1. The Road to Success. Fundamental, technical, or mental analysis. Imagine stepping into the world of trading for the first time. Screens filled with numbers, charts dancing in motion, and endless opportunities that seem to whisper, "You can win big." That's how Mark Douglas begins the journey in trading in the zone. He doesn't start by telling you how to read charts or calculate indicators. Instead, he challenges the very foundation of what makes someone succeed or fail in the markets. This chapter is not about methods, it's about mindset, and it starts by dissecting the evolution of trading itself, from fundamental to technical, and finally to mental analysis, the true key to mastery. Mark recalls how in the early days, traders relied entirely on fundamental analysis, believing logic and reason ruled the markets. They studied supply and demand, corporate reports, and global economics, assuming that prices reflected objective truth. But as the decades passed, reality shattered that illusion. Markets moved in ways that defied logic, driven by emotions, greed, fear, and collective psychology. So the trading world shifted toward technical analysis, where patterns, charts, and price movements replaced balance sheets. Technical traders discovered that markets repeat themselves because human behavior repeats itself. The same emotions, hope, fear, and greed, appear again and again on every chart, no matter the time frame or the instrument. Yet, as Douglas points out, even with advanced tools, traders still fail. They know when to buy and when to sell, yet they freeze, hesitate, or act too soon. The charts don't fail, the trader's mind does. That realization birthed the final and most powerful form of understanding: mental analysis. It's the recognition that success in trading doesn't come from predicting the market. It comes from mastering yourself. The best traders think differently. They don't see winning and losing as emotional experiences, but as natural outcomes of probability. To them, each trade is just one event in a series of many, and they never attach personal identity or ego to the result. Average traders, however, ride an emotional roller coaster. When they win, they feel powerful. When they lose, they feel broken. That emotional instability destroys consistency. One of the key lessons in this chapter is that consistency in trading is not a function of knowledge. It's a function of mental discipline. You can be the smartest analyst in the world and still lose if you can't control fear and greed. As Douglas explains, the market is an environment of constant uncertainty where anything can happen at any moment. To thrive in that chaos, you must train your mind to remain calm, detached, and confident, no matter what unfolds. He beautifully illustrates this with a comparison. The consistent trader and the average trader are like the Earth and the Moon, existing in the same universe but entirely different in nature. Both may analyze charts, use systems, and trade the same instruments, yet their internal worlds are miles apart. The consistent trader embraces uncertainty and risk. The struggling trader tries to avoid it. The consistent trader accepts loss as a natural part of the game. The struggling trader fights it, fears it, and denies it. Mark's words hit deep when he says, "You don't need to know what's going to happen next to make money. That single idea frees traders from the illusion of control. Most people believe that to win, they must predict the market's next move. But the truth is, prediction is impossible. The market is driven by millions of independent decisions, emotions, and random events. The best traders win not because they know what will happen, but because they know how to respond to whatever happens. At the psychological level, Douglas introduces a crucial concept: the acceptance of risk. He explains that most traders claim they are risk takers, but in reality, they aren't. They may enter a trade, but deep down they haven't fully accepted the possibility of being wrong. They still hold on to the emotional pain of loss, fear of missing out, or regret. Until a trader learns to truly accept risk, not just intellectually, but emotionally, they will continue to sabotage their results. Accepting risk doesn't mean liking losses. It means emotionally embracing the uncertainty of every outcome without fear or hesitation. He says, when you truly accept the risk, you will have no reason to define market information in painful ways. This insight is transformative. Once you stop fearing losses, your perception becomes objective. The market stops being a threat and instead becomes information, neutral, honest, and full of opportunity. You no longer hesitate or overreact. You act from clarity and confidence, not emotion. Douglas also warns about the psychological gap, the space between knowing what you should do and actually doing it. Every trader has experienced it, seeing a perfect setup, knowing it's right, but not taking the trade. Or exiting too early, only to watch the price move exactly as predicted. That gap exists because emotions override logic. The mind, filled with fear of loss or missing out, distorts perception and paralyzes action. The solution isn't more market knowledge, it's emotional conditioning. The underlying message is simple but profound. Trading success is 80% psychology and 20% mechanics. The chart doesn't decide your outcome, your mindset does. Mark reminds us that trading isn't about conquering the market, it's about conquering yourself. The consistent trader reaches a mental state where fear, hesitation, and greed no longer control decisions. They operate in what Douglas calls the zone, a state of flow where decisions feel effortless, reactions are instant, and confidence replaces doubt. In this state, trading feels as easy as watching the market. No stress, no inner conflict, just smooth execution. Applying this lesson to real trading begins with awareness. Notice when fear or hesitation creeps in. Understand that every moment of doubt comes from resisting uncertainty. When you feel that resistance, breathe and remind yourself, anything can happen, and that's okay. Replace the need to be right with the desire to act correctly. Over time, your confidence grows, not because the market becomes predictable, but because you learn to remain centered no matter what it does. Mark's words echo a truth that goes far beyond charts and profits. The market doesn't generate your feelings. You do. Once you realize that, you reclaim control. You stop being a victim of the market's moves and start being the master of your own reactions. The reminder that trading mastery is not about intelligence, luck, or systems. It's about inner transformation. Anyone can learn charts, but few can learn detachment, discipline, and acceptance. Yet, those who do enter a world where trading becomes joyful, peaceful, and effortless, a reflection not of the market, but of the calm mind behind it. Mark Douglas invites you to take that journey, not to master the market, but to master yourself. Because once you do, every trade becomes a mirror, showing you who you truly are. And in that reflection, you find not chaos, but clarity. Not fear, but freedom. Chapter 2. The Lure and the Dangers of Trading. Trading has a strange kind of magic. It promises freedom, the power to create wealth from a laptop, no boss, no schedule, no limits. To many, it feels like the ultimate form of independence. And that's where the lure begins. Mark Douglas opens this chapter with a powerful insight. Trading is not just about making money, it's about the human desire for freedom of expression. But hidden beneath that freedom lies danger. Because the same limitless possibilities that attract us can also destroy us if we are not mentally prepared to handle them. Douglas describes how, in trading, you make your own rules. You decide when to enter, when to exit, and how much to risk. There's no one to stop you. It's pure, unfiltered freedom, and that is precisely why most people fail. Human beings are not naturally equipped to function effectively in an environment with no boundaries. We crave structure, validation, and feedback from the world around us. But in the markets, there is no such safety net. The market doesn't care about your dreams, your ego, or your reasons. It simply moves. It rewards some and punishes others, not based on fairness, but based on readiness. Mark explains that from childhood, we are raised within systems of structure, family rules, school expectations, laws, and social norms. We learn to conform, to ask permission, and to follow the limits others set for us. But when we enter the trading world, all those limits vanish overnight. Suddenly, you are in charge. You can risk everything on one trade, ignore your plan, or chase a wild hunch, and no one can stop you. That freedom feels intoxicating. Yet, it's this very lack of structure that often leads to ruin. He tells us that trading exposes the truth about who we really are. It's like holding up a mirror to our emotions. All the fears, insecurities, impatience, and denial we've buried in our daily lives come to the surface in front of the market. When you trade, you're not battling the market. You're battling yourself. And that's why so many traders lose, not because the market is unpredictable, but because they cannot control their inner world. Mark shares a profound psychological principle here. Our need for freedom and our resistance to rules are deeply connected. Since childhood, many of our natural impulses were denied. Every time we were told, no, you can't do that, it created emotional friction, a buildup of denied expression. As adults, when we discover a world like trading that offers complete freedom, that buried need explodes. We feel powerful, liberated, unstoppable. But that same hunger for freedom also makes us resist discipline, structure, and rules, the very things that protect us from self-destruction. He reminds us that this is not just a theory, it's human psychology. We carry our past conditioning into trading. When we were young, we learned to express ourselves only within boundaries. Each denied impulse, each no, left a psychological imprint. We learned to fear punishment, to avoid mistakes, and to seek approval. In trading, those patterns surface again. When the market goes against us, it feels personal. When we lose, it feels like rejection. And when we win, it feels like validation. These emotions are old. They come from childhood. But the market doesn't care about them. The market simply reflects them back to us. One of the most striking insights Douglas offers in this chapter is that trading is the ultimate mirror of your beliefs about yourself. If you're impatient, the market will test your patience. If you're greedy, it will exploit your greed. If you can't handle uncertainty, it will confront you with it over and over until you surrender or adapt. He writes, "The freedom to do anything you want in trading is both a gift and a curse. The gift is self-determination. The curse is that without internal discipline, that same freedom becomes chaos. The market has no rules to keep you safe. There are no timeouts, no referees, no mandatory limits. The only boundaries are the ones you create in your mind, and most traders never build them." Douglas illustrates how easy it is to spiral into destructive habits. You can ignore your stop loss, add to a losing position, or move your target because it might turn around. No one will stop you. You are free, and that's what makes it dangerous. Without mental discipline, the freedom of trading becomes a psychological trap, one that slowly drains both your capital and your confidence. He identifies 4 deep-rooted problems that arise from this lack of structure: unwillingness to create rules, failure to take responsibility, addiction to random rewards, and dependence on external control. Each one sabotages consistency in its own way. The unwillingness to create rules is born from our internal rebellion. We've spent our lives following someone else's rules, and trading finally feels like freedom. So when someone says, you need a trading plan, our subconscious resists. It feels like confinement again. Yet, Mark insists that discipline is not restriction, it's self-protection. Rules are not chains, they are the framework that allows freedom to exist without chaos. Then comes the failure to take responsibility. Many traders love freedom, but avoid accountability. When a trade fails, they blame the broker, the news, or the market. This avoidance gives short-term relief, but causes long-term failure. Douglas reminds us, as long as you can find something or someone to blame, you won't take responsibility. In trading, responsibility means owning every decision, entry, exit, risk, and outcome. It's total psychological ownership. The third issue, addiction to random rewards, is one of the most dangerous. The occasional big win creates an emotional high, a rush of dopamine that feels euphoric. The trader begins chasing that feeling, ignoring risk and reason. It becomes gambling disguised as trading. Mark compares this to lab experiments, where monkeys kept pressing levers for random rewards, even when the rewards stopped coming. The human brain works the same way. The random nature of the market feeds this addiction, creating traders who can't stop even when losing. Finally, there's external versus internal control. Most of us grow up learning to control our environment, to influence others, manipulate situations, and bend the world to our will. But in trading, that doesn't work. The market cannot be controlled or influenced. It doesn't respond to your hopes or fears. The only thing you can control is yourself, your perception, your emotions, your reactions. And until you master that, the market will always seem like your enemy. Douglas doesn't romanticize trading. He shows it as it truly is, a psychological battlefield. The market exposes your weaknesses faster than any other profession. Yet, it also offers the most powerful path to self-mastery, if you're willing to face yourself. To apply these lessons, Mark encourages traders to start building internal structure. Create simple, clear rules. Define your risk before you trade. Accept that losing is part of the process, not a reflection of your worth. When emotions arise, fear, greed, revenge, frustration, don't suppress them. Observe them. Recognize that they are signals from old conditioning trying to regain control. The moment you see them clearly, they lose their power. Trading then becomes more than a profession. It becomes a practice, a journey of inner growth. You begin to detach from outcomes, trade with clarity, and act from discipline, not impulse. Over time, the chaos of the market turns into a rhythm, one that mirrors your calm rather than your conflict. Mark Douglas closes this chapter with an unspoken truth that every trader must face. You can only control your behavior, not the markets. Once you understand that, everything changes. The struggle disappears. The market becomes neutral, and your emotions stop dictating your actions. You become steady, confident, and free, not because the market gave you freedom, but because you built it within yourself. That's the paradox of trading. The ultimate freedom comes only after total discipline. And once you master that, the market stops being dangerous. It becomes your greatest teacher. Chapter 3. Taking responsibility. There comes a moment in every trader's journey when the charts no longer matter, when strategies, indicators, and signals all fade into the background, and the only thing left standing is you. To the heart of what separates those who struggle endlessly from those who finally find consistency, the ability to take complete, unconditional responsibility for every trade, every decision, and every outcome. It sounds simple, doesn't it? Take responsibility. But as Douglas reveals, it's one of the hardest mental transformations a trader will ever face. Because most people believe they already do. They think that if they're placing trades and managing their account, they're taking responsibility. Yet the truth is far deeper. Taking responsibility, in Mark's view, means fully accepting that you are the sole creator of your trading results, not the market, not the news, not your broker, not luck. You. Every gain, every loss, every missed opportunity flows from the decisions you make and the beliefs that drive them. He opens the chapter by reminding us that becoming a consistent trader is not about becoming perfect. It's about becoming self-aware. Every trader carries invisible beliefs that shape how they interpret market information. Some of those beliefs empower, while others sabotage. When you take responsibility, you stop projecting blame outward and start examining inward. That shift changes everything. Mark explains that the trading environment is completely neutral. It has no agenda, no emotion, and no bias. The market doesn't know who you are or care about your position. Yet most traders treat it like an adversary. They curse it for losses, praise it for wins, and see it as a force that's either helping or hurting them. This illusion creates emotional chaos because it gives power to something outside yourself. When you see the market as an enemy, you lose control. But when you realize the market simply reflects your decisions, you reclaim your power. He writes, "You can't control the market, but you can control yourself. The degree to which you take responsibility for that control will determine your success." The inner world of beliefs, emotions, and thoughts that define how you experience trading. Douglas compares this process to an artist sculpting clay. To become a consistent trader, you must sculpt a new version of yourself, one that can act calmly, decisively, and confidently under pressure. The tools you use for this transformation are not indicators or analysis, but willingness, awareness, and discipline. He makes a striking point. Every trader wants consistency, but few are willing to change the beliefs that block it. Consistency demands mental flexibility, the ability to adapt without emotional resistance. To achieve that, you must let go of the need to be right, the fear of losing, and a tendency to blame. Every time you blame the market or circumstances, you create separation between yourself and the truth. You start believing that outcomes are caused by something beyond your control, and that belief kills growth. Mark reminds us of a paradox that defines the trading world. While the market offers unlimited freedom, that same freedom demands unlimited responsibility. You decide when to enter, when to exit, and how much to risk. But you must also accept whatever results come from those choices without justification or denial. Freedom and responsibility are inseparable. If you want one, you must accept the other. He explains that the process of taking full responsibility begins with owning your mistakes without emotional judgment. Most traders, after a loss, react with shame, frustration, or denial. They tell themselves, "The market tricked me," or "it was bad luck." But this emotional resistance keeps them trapped in the same cycle. When you blame, you blind yourself to what the market was really showing you. Responsibility opens the door to learning. Blame closes it. Douglas introduces a beautiful psychological insight here. Your beliefs about yourself create your experience in the market. If you believe you're unlucky, you'll subconsciously seek situations that confirm it. If you believe you're capable, calm, and disciplined, you'll start acting in alignment with that belief. The market, in that sense, becomes a mirror of your inner state. Taking responsibility means accepting that what you experience externally is a reflection of what you hold internally. He also talks about emotional pain, how traders often associate loss with personal failure. In life, we're conditioned to view mistakes as something bad, something to be ashamed of. But in trading, that mindset is toxic. Losses are information, not punishment. Each losing trade teaches something vital about your timing, your emotions, or your assumptions. When you view losses as data, not danger, the fear of them fades away. And with that fear gone, you become free to trade without hesitation or regret. Mark explains that emotional freedom comes from one thing: acceptance. Acceptance that losses are part of the game, that uncertainty is unavoidable, and that your worth as a person has nothing to do with the outcome of a single trade. Once you truly internalize that, your mindset shifts from defensiveness to curiosity. Instead of reacting with fear, you start asking, "What can I learn from this?" That question transforms frustration into growth, and over time, growth into consistency. He emphasizes that the path to consistency isn't about controlling the market. It's about controlling your response to it. You can't choose what the market will do next, but you can always choose how you'll interpret it and what action you'll take. That's where your power lies. The market is unpredictable, but your discipline doesn't have to be. Mark shares that successful traders have built mental frameworks that protect them from emotional chaos. They act on probabilities, not emotions. They know that every trade is just one event in a series, and they don't need to know which one will win. They just need to execute their edge faithfully. Their confidence doesn't come from prediction, it comes from preparation. When you assume absolute responsibility, you gain absolute power. The more responsibility you take, the more control you gain over your actions, your reactions, and your destiny as a trader. To apply these lessons, Douglas encourages traders to begin small. After every trade, good or bad, pause and reflect honestly. Don't justify, don't defend. Just observe. Ask yourself, what was I feeling before the trade? Was I following my plan or chasing an emotion? What belief drove that action? Over time, this reflection reveals patterns, and once you see your patterns clearly, you can change them. He also recommends shifting focus from outcomes to process. If your goal is to make money, your emotions will rise and fall with every tick of the market. But if your goal is to follow your plan flawlessly, your emotions remain stable because success is now measured by your behavior, not the result. Ironically, when you stop chasing money and start mastering discipline, the money starts flowing naturally. Douglas leaves you with a quiet but profound realization. Trading is a mirror of life itself. The same principles that lead to mastery in markets, responsibility, awareness, and emotional control are the same that lead to mastery in living. Each trade becomes an opportunity to know yourself better, to let go of fear, and to act with integrity, even under pressure. He doesn't scold, he enlightens. He's like a mentor saying, you already have everything you need to succeed, but you must stop fighting reality and start owning it. Once you do, the market ceases to be an unpredictable storm and becomes a reflection of your own calm. Taking responsibility, he reminds us, isn't about blame, it's about empowerment. When you finally understand that nothing outside you determines your success, you unlock the freedom that drew you to trading in the first place. And with that realization, the mind begins to quiet, the fear fades, and consistency, that elusive dream, finally starts to feel real. Chapter 4. Consistency. A state of mind. Imagine waking up each morning knowing exactly what kind of trader you are: calm, confident, and consistent. You sit before the charts, no longer anxious or desperate to make money, but focused and centered. The outcome doesn't control you anymore. The market's random moves no longer feel like threats. You trade freely, without fear or hesitation. That is the mental state Mark Douglas calls the zone. And in this chapter, he explains how consistency isn't something you chase, but something you become. Douglas begins with a striking truth. Consistency is not something you can gain by learning more about the markets. It's something that emerges from a consistent state of mind. Most traders believe that if they study harder, analyze better, or find a more accurate indicator, they'll finally unlock consistent profits. But knowledge alone doesn't create consistency. Mindset does. Because in trading, the market isn't your opponent. Your own thoughts are. He explains that the reason most traders fail isn't a lack of skill. It's their inability to align their mental environment with the true nature of the market. The market is uncertain. Every trade outcome is unpredictable. There's no guarantee, no safety, and no certainty. And yet most traders act as if there should be. They crave certainty in a place where it doesn't exist. This internal conflict creates stress, fear, and hesitation. Douglas says, if you want consistency, you must stop trying to be right and start thinking in probabilities. Every trade is simply one of many. The goal isn't to win every time. It's to execute with discipline and let probabilities play out over a series of trades. The consistent trader doesn't attach emotion to the result of one trade. They see it as part of a long-term statistical edge. He compares trading to flipping a coin with a slightly weighted advantage. If you know that your coin lands on heads 60% of the time, your job isn't to predict which specific flip will be heads, it's to keep flipping with consistency. Over time, the law of large numbers guarantees that your edge will show itself. But most traders never reach that point because they stop after a few losses, doubting themselves or their method. Their emotions sabotage the edge before probability can even play out. Mark emphasizes that most traders say they accept risk, but they don't. True acceptance means being completely at peace with whatever the outcome is, win or lose. It means you don't need the market to do anything to make you feel good or safe. You've detached your identity from the trade. Until you reach that state, fear will control you. He writes, when you truly accept the risk, you eliminate the fear. And without fear, everything changes. You see the market clearly, without distortion. You no longer hesitate to take valid setups. You no longer hold on to losers, hoping they'll turn around. You act fluidly, without second guessing. Your confidence comes not from knowing what will happen next, but from knowing you can handle whatever happens. Mark describes this mindset as thinking like a professional. Professionals don't measure their worth by one outcome. They think in terms of process, probabilities, and discipline. Amateurs, on the other hand, attach emotion to each trade, taking losses personally and victories as proof of superiority. This emotional instability keeps them trapped in inconsistency. One of the most powerful ideas in this chapter is the distinction between trusting yourself and trusting the market. The consistent trader doesn't try to trust the market because the market is unpredictable. Instead, they learn to trust themselves, their process, their plan, their ability to execute without emotional interference. Trusting yourself means knowing that you'll act in your own best interest no matter what the market does. Douglas explains that confidence and fear cannot coexist. The moment you begin to fear being wrong, you lose focus, hesitate, or make impulsive decisions. But when you have trained your mind to act without fear, your actions become automatic and precise. That is what it means to trade in the zone, where every decision flows effortlessly from clarity and confidence. He reminds us that this mental state doesn't come from reading a book or attending a seminar. It must be trained through repetition and self-awareness. The key is to shift your focus from outcomes to execution. Instead of asking, "Did I make money?" Ask, "Did I follow my plan perfectly?" When your satisfaction comes from discipline instead of profit, consistency becomes natural. Mark beautifully states, "You don't achieve consistency by trying to control the market. You achieve it by controlling yourself." The market will always be uncertain, but your reactions don't have to be. Once you accept this truth, your emotional balance stabilizes. You stop swinging between hope and fear. You stop chasing wins or avoiding losses. You simply execute, calmly, confidently, and repeatedly. He also touches on a subtle but profound truth. Most traders unconsciously seek excitement. They treat trading like an emotional roller coaster, the thrill of winning, the agony of losing. But true professionals are not thrill seekers. They are process followers. Their emotional state remains stable whether they win or lose because they understand that no single trade defines them. Douglas encourages traders to ask themselves, "Do I want to be right or do I want to make money?" The need to be right is the ego's trap. It makes you hold losing positions longer than you should, hoping the market will vindicate you. It makes you ignore stops or double down to avoid admitting a mistake. But consistency requires humility, the ability to say, "I was wrong," without emotional pain. The consistent trader doesn't see being wrong as failure. They see it as feedback. He teaches that emotional neutrality is not coldness, it's balance. When you remove emotional extremes, you gain clarity. You can observe the market without bias, without projecting your fears or hopes onto it. In that clarity, you see opportunities others miss. One of the most memorable ideas is that the market rewards discipline, not prediction. Every trade is an opportunity to demonstrate trust in your edge. The outcome of one trade means nothing. What matters is how well you follow your plan over time. That's where real consistency comes from. Douglas also offers a psychological exercise for traders to rewire their mindset. After every trading session, review your trades not to judge the outcome, but to analyze your process. Did you follow your rules? Did you hesitate or act impulsively? What emotion was driving you? This reflection builds self-awareness and helps separate process-based success from emotional reactivity. Douglas's calm, steady voice guiding you towards self-mastery. He reminds us that the market's randomness is not something to fear. It's something to embrace. Once you accept that anything can happen, fear disappears, and freedom begins. The line that feels like both wisdom and liberation. Consistency is a state of mind that comes from learning to think in probabilities and acting without fear. It's not about perfection or prediction. It's about harmony between your beliefs and the market's reality. When you finally align your mind with the truth of uncertainty, trading becomes peaceful. You stop fighting the market. You stop fighting yourself. You flow with what is. Confident, not because you know what will happen, but because you know you can handle whatever comes. And in that moment, you discover what every trader is really searching for. Not just profit, but peace. Chapter 5. The Dynamics of Perception. Every trader believes they see the market clearly until they realize that what they see isn't reality, but a reflection of their own mind. Mark Douglas dives deep into the mysterious world of perception, showing how the way we see the market determines everything we experience within it. Trading isn't just about reading charts, it's about understanding how your mind interprets those charts. And most of the time, that interpretation is distorted by fear, desire, and past experiences. Douglas begins by saying that perception is not objective, it's personal. Every trader looks at the same chart, but each sees something different, not because the chart changes, but because their internal filters do. These filters are made up of beliefs, experiences, and emotions that color how we interpret information. He reminds us that the market's behavior is neutral. It's not good or bad, right or wrong. It just is. Yet traders rarely experience it that way. They project meaning onto price movements, turning simple market data into emotional experiences. He writes, "The market doesn't generate happy or painful information. We do. What you feel when you trade doesn't come from the market. It comes from what the market triggers inside you. If you've been burned by a sudden reversal before, you might see every pullback as danger. If you once made a big win on a breakout, you might see every breakout as an opportunity. Neither perception is reality. Both are reflections of belief." Douglas explains that this misalignment between perception and reality is one of the greatest barriers to consistency. When your perception is distorted, you can't respond to what the market is actually doing, only to what you think it's doing. Your decisions become emotional reactions instead of objective responses. The consistent trader, however, trains their mind to see what's actually there, not what they fear or hope to see. He introduces a key psychological principle here. Your mind organizes information to confirm what you already believe. This is known as confirmation bias, and it's deadly in trading. If you believe the market is bullish, your mind will subconsciously filter out bearish signals. You'll only notice what supports your belief. The market may be screaming that a reversal is coming, but you won't see it. Not because it isn't there, but because your brain blocks it out to protect your belief. Douglas calls this mental software. Just like a computer runs based on its code, our minds operate based on our beliefs. If your internal code says, "losing is bad," your brain will distort information to avoid acknowledging loss, perhaps convincing you to hold a losing trade, hoping it'll turn around. If your code says, "I need to be right," you'll ignore signs that contradict your analysis, sabotaging your objectivity. He says, to change your results, you must debug your mental software. The goal isn't to force the market to change, but to change the way you process what it shows you. Mark reveals something that most traders never realize. We don't trade the market. We trade our beliefs about the market. The chart doesn't make us act. Our interpretation of it does. If you believe a pattern signals profit, you'll buy. If you believe it signals danger, you'll sell. Two traders can look at the same setup and take opposite sides, both convinced they're right. That's the power of perception. He gives an example. Imagine two traders watching the same price move. One sees it as a breakout, the other sees it as a trap. The market hasn't changed. Their minds have. The first trader feels excitement, the second feels fear. The result isn't determined by who's smarter, but by whose perception aligns more closely with what the market actually does next. Douglas urges traders to stop trying to control the market and start learning to control their interpretations of it. This requires self-awareness, the ability to notice when your thoughts are being influenced by fear or greed. When you feel anxious, ask yourself, am I reacting to the market or to my memory of past pain? That question alone can break the emotional spell and bring you back to the present moment where the market exists. He introduces a fascinating idea, the illusion of certainty. Our minds crave stability. We want to believe we know what will happen next. But in trading, there is no certainty. Every moment is unique. Every price tick is a product of countless variables. The trader who accepts uncertainty as truth gains freedom. The one who resists it lives in constant frustration. When you accept that anything can happen, your perception clears because you're no longer trying to force reality into your expectations. Mark explains that learning to see clearly means detaching from emotional attachment to outcomes. When you no longer need the market to make you feel good, you can finally see it as it is. The best traders are emotionally neutral. They see opportunity and risk with equal clarity. Their decisions come from logic, not emotion. He shares a memorable insight. The way you feel about the market will always tell you more about yourself than about the market. If you feel fear, it's because you're projecting danger. If you feel greed, it's because you're projecting hope. The market reflects your internal state like a mirror. By studying your emotional reactions, you learn about the beliefs shaping your perception. This is where Mark's teaching becomes deeply psychological. He reminds us that all perception is learned. From childhood, we were conditioned to react to the world in certain ways, to avoid pain, seek approval, fear mistakes. Those same emotional patterns appear when we trade. When the market goes against us, it triggers old feelings of failure or rejection. When we win, we feel validation, but both reactions are traps because they tie our emotional state to something we can't control. The consistent trader breaks free from this cycle. They understand that trading is not about emotional survival, but about statistical execution. Their perception is guided by the probabilities, not emotions. They've learned to stay centered in uncertainty, treating every outcome as information, not identity. Douglas teaches that perception and risk are inseparable. If your perception is distorted by fear, risk feels unbearable. But when you accept risk fully, when you genuinely make peace with loss, your perception becomes objective. You see opportunities where others see danger. You act decisively while others hesitate. The market doesn't change. Your mental state does. He explains how association plays a role in this. The mind links current market events with past experiences. If you once lost money on a sudden reversal, your brain will associate similar setups with pain, even if they're profitable opportunities. These emotional associations distort your judgment. The way to break them is through conscious reconditioning, exposing yourself to trades, managing risk properly, and proving to your subconscious that you can survive any outcome. Gradually, fear fades and clarity grows. Mark says that mastering perception means seeing each moment in the market as unique, free from the weight of past wins or losses. Every trade is a new opportunity, not a continuation of what came before. When you can do that, you've reached a level of mental freedom few traders ever experience. He reminds us that the greatest traders don't see the market as right or wrong, only as information. They respond to that information without attachment, without ego. Their perception is clear because they've stripped away the emotional noise. That's what allows them to trade with calm precision, no matter the market's volatility. Douglas leaves us with a quiet yet powerful realization. Perception is everything. You don't trade what's real, you trade what you believe is real. Change your perception, and you change your trading. But more than that, you change your life. Because the ability to see clearly without emotional distortion is not just the key to market success, it's the key to peace. Trading, he reminds us, is not about predicting prices. It's about learning to see the market without the fog of fear, without the illusion of certainty, without the ghosts of the past. When your perception becomes pure, your actions become effortless. And that, Mark says, is when you truly begin trading in the zone. Chapter 6. The Market's Perspective. He gently reminds us that the market is not a person. It's not your friend. It's not your enemy. And it has no intentions. It doesn't know you exist. And yet traders act as if the market is alive, as if it's watching, judging, or conspiring against them. They talk to it, plead with it, curse it, celebrate it. But the truth, Douglas explains, is that the market is pure neutrality, a perfect mirror of collective human behavior. It reflects back only what traders bring into it: their expectations, beliefs, and emotions. To succeed, you must learn to see from the market's perspective, not your own. He opens with a powerful line of thought. The market's behavior is a reflection of the sum total of everyone participating in it at any given moment. Each tick, each move is the collective expression of thousands, even millions, of traders acting on their beliefs about what will happen next. Some think prices will go up, others think they'll go down. The constant push and pull of these opposing forces creates motion, price movement, but not meaning. The meaning exists only in your mind. Mark introduces what he calls the uncertainty principle of trading. It's not a mathematical theory, it's a psychological one. It means that the outcome of every single trade is uncertain. No matter how strong your analysis, how reliable your setup, or how much experience you have, you can never know with absolute certainty what will happen next. Anything can happen, and it often does. The market doesn't owe you a pattern, a reaction, or a follow-through. It only owes you uncertainty. He points out that most traders struggle because they resist this truth. They crave control in an environment that offers none. They expect the market to behave logically, consistently, or fairly. But the market isn't logical or fair. It's dynamic, unpredictable, and ever-changing. When you demand certainty from an uncertain environment, frustration is inevitable. Douglas writes, "The market's behavior is beyond your control, but your response to it is not." That's the key. The only true control you have is over your mindset and your reactions. The moment you stop expecting the market to behave according to your desires, you begin to align with its nature. You begin to see things as they are, not as you wish them to be. He urges traders to stop taking losses personally. The market isn't out to get you. It's simply doing what it does. Every tick, every fluctuation is information, not judgment. When you lose, it's not punishment. When you win, it's not reward. It's just the outcome of probabilities. The market doesn't care who you are, billionaire or beginner. It treats everyone the same. Once you truly understand that, you become emotionally free. Mark brings a deep psychological insight here, one that can transform how you see the market forever. He says that traders project their internal world onto the market. If you're fearful, you'll see danger in every move. If you're greedy, you'll see opportunity everywhere. The market, in this way, becomes a screen onto which you project your inner state. It's never personal, but it always feels personal, because your emotions make it so. He explains that to trade effectively, you must step outside your personal lens and learn to see from the market's perspective. From that view, every tick, every candle, every spike in volume is simply the natural consequence of traders acting on their beliefs. Prices move because people act, not because the market wants something to happen. There's no intention behind a price move. When you realize this, the emotional weight of trading begins to lift. Douglas illustrates this beautifully with an example. Imagine you're watching a river. The current flows, sometimes fast, sometimes slow. You don't yell at the river when it turns or speeds up. You just observe and adapt. The river doesn't care about your plans. It simply moves according to nature. The market is no different. It flows based on the natural forces of buying and selling, belief and doubt. You can't control it. You can only navigate it. He explains that one of the biggest traps traders fall into is assigning emotional meaning to random events. If you win a trade, you feel elated. If you lose, you feel crushed. But these emotions distort perception. The professional trader doesn't react to outcomes with emotion. They see both wins and losses as neutral data points in an ongoing process. They've trained their minds to detach their sense of self from their results. Mark puts it bluntly. When you can accept that anything can happen, you'll stop being surprised by what the market does. That's the essence of trading mastery. Reaching a place where nothing the market does disturbs your mental balance. You don't predict, you respond. You don't react emotionally, you observe objectively. He reveals a profound psychological truth. Your struggle with the market is really a struggle with yourself. Every time you feel angry, frustrated, or betrayed by the market, it's because your expectations were violated. You expected one outcome, and reality delivered another. That emotional pain isn't caused by the market. It's caused by the gap between your expectation and what is. The moment you let go of expectation, that pain disappears. Douglas encourages traders to think like scientists rather than gamblers. A scientist doesn't get upset when an experiment produces an unexpected result. They get curious. They collect data, make observations, and adjust their approach. The professional trader does the same. Every trade, win or lose, provides feedback. Instead of labeling it as success or failure, they see it as information that sharpens their edge. He says, the market's fundamental characteristic is uncertainty. The only certainty you have is how you will respond to it. That's the trader's real power, emotional stability in the face of randomness. Mark explains that most traders unconsciously fight the market. They try to impose their will on it, expecting it to move according to their analysis or hopes. But when you resist the market's natural flow, you create inner conflict, and that conflict expresses itself as hesitation, doubt, or impulsive behavior. The path to mastery lies in surrender, not in giving up, but in accepting that the market owes you nothing. You participate, not control. He introduces the concept of becoming market neutral. That doesn't mean you don't care about outcomes. It means you don't react to them emotionally. You see opportunity and risk in perfect balance. You remain calm when trades go against you and humble when they go your way. From that state, your mind stays clear and your decisions stay precise. Douglas paints a vivid picture. The consistent trader stands in the middle of chaos but feels no fear. Prices rise and fall, emotions swirl around, but inside, there is calm. This is what it means to think from the market's perspective, to see its movement as information, not emotion, as opportunity, not threat. To apply this lesson, Mark offers simple but powerful guidance. Before each trade, remind yourself, anything can happen. Not as a cliche, but as truth. This statement frees you from attachment. It reminds you that no matter how good the setup, the outcome is uncertain. And that's okay. It's not your job to know what will happen. It's your job to respond wisely when it does. Your task is not to fight it, but to understand it. Not to control it, but to flow with it. The moment you accept this truth, your entire trading experience changes. He closes with a timeless insight that captures the essence of trading in the zone. When you stop expecting the market to give you anything, you'll start seeing everything it has to offer. It's in that surrender, that deep acceptance of uncertainty, that true freedom begins. You stop trading against the market and start trading with it. And in that harmony, consistency becomes natural, effortless, and deeply peaceful. Chapter 7. The Trader's Edge. Thinking in Probabilities. With one of the most liberating truths in all of trading. Anything can happen. Those three words, he says, contain the essence of a trader's edge. The moment you truly accept them, not just intellectually, but emotionally, you step into the mindset of consistent winners. Because consistency in trading doesn't come from predicting. It comes from thinking in probabilities. He explains that most traders fail not because they lack skill or strategy, but because they expect certainty in a world that offers none. They search for a method that never loses, a setup that always works. They want guarantees where only probabilities exist. But the market is an arena of randomness, an environment where no single trade outcome can ever be known in advance. The best traders thrive because they understand this truth deeply. They don't try to predict, they prepare. They don't need to know what will happen next to make money. They simply know that over time, if they execute their edge with discipline, the probabilities will play out in their favor. Douglas paints a vivid picture of the difference between consistent and inconsistent traders. The inconsistent trader looks at every trade as unique and emotionally charged. Each win makes them feel invincible. Each loss feels like failure. They react to every outcome as if it defines them. The consistent trader, by contrast, sees each trade as one event in a long series, like a single spin in a casino game, where the odds are slightly tilted toward the house. They know that one spin means nothing. It's the series that matters. He compares the professional trader to a casino owner. The casino doesn't know who will win or lose any particular hand of blackjack, but it knows that over thousands of hands, the odds guarantee profit. The key is consistency in execution. The casino never panics after a losing hand or celebrates a big win. It just keeps dealing cards. The same applies to trading. If you have an edge, a method that produces positive expectancy over many trades, your only job is to execute it flawlessly, without emotional interference. Mark explains that the edge doesn't need to be perfect. It just needs to have a positive probability. It might only win 55% or 60% of the time. But if you manage risk properly and follow your plan, that's enough to make you a consistent winner. The real battle isn't with the market. It's with your mind's need for certainty. Your subconscious wants to know that this trade will work, that you'll win this time. That craving for certainty causes hesitation, fear, and impulsive behavior. The trader who can accept uncertainty without emotional discomfort has already won half the battle. He writes, "You don't need to know what's going to happen next to make money. You just need to know what you're going to do if it happens." That line is like a mantra for every trader who seeks freedom from fear. It means your power lies not in prediction, but in preparation. Your confidence comes not from the outcome, but from your ability to respond. Douglas introduces the idea of random distribution of wins and losses. Even if your system has a high success rate, you can't predict the sequence of outcomes. You might have 3 losses in a row, followed by 5 wins, or the reverse. This randomness destroys traders who can't think in probabilities because they misinterpret short-term outcomes. A few losses make them doubt their system. A few wins make them reckless. But the trader who understands probability sees these fluctuations as normal, not emotional. He calls this the paradox of trading. Outcomes are random, but results can be consistent. That paradox can only be embraced through probabilistic thinking. You have to believe, with conviction, that your next trade has an uncertain outcome, but your series of trades over time will produce predictable results. Mark then dives into the emotional side of probability thinking. He explains that fear comes from focusing on a single trade and assigning it too much meaning. When you obsess over one outcome, you create emotional pressure. You need that trade to work, and when it doesn't, your confidence shatters. But when you think in terms of many trades, when you view each one as just one of hundreds in a series, the emotional intensity fades. Each trade becomes just another small step in a long process. He teaches that true freedom in trading comes when you no longer care about any single outcome. Not because you're careless, but because you've built trust in your process. You've learned to detach your emotions from results. You don't need the market to validate you. You're already secure in your edge. Mark also discusses managing expectations. Unrealistic expectations are emotional traps. When traders expect to win every trade, every loss feels like betrayal. When they expect the market to behave a certain way, every surprise feels personal. Consistent traders, however, expect nothing. They know the market owes them nothing. They approach each trade with an open mind, ready for any outcome. That openness allows them to adapt quickly, while others freeze in disappointment. He writes, "Anything can happen. You don't need to know what will happen next to make money." It's repeated throughout the book for a reason. It's the foundation of psychological freedom. The moment you internalize it, you stop fighting reality. You stop needing the market to make you feel safe or right. You start trading with clarity, ease, and flow. Douglas also introduces the idea of eliminating emotional risk. Emotional risk is what happens when your sense of self-worth is tied to your results. When you win, you feel validated. When you lose, you feel damaged. This emotional dependency creates chaos. To eliminate it, you must separate who you are from what happens in the market. You're not your P&L. You're the observer, the decision maker. The results are just data, feedback on execution. He explains that consistent traders trade in the moment. They're fully present, not haunted by past losses or driven by future hopes. They act on what's happening right now, not on what they fear might happen. This presence creates a flow state, what Mark calls the zone. In this state, action feels effortless. You don't think, you simply execute with complete confidence and trust. Douglas paints a vivid picture of what it feels like to trade in probabilities. You're calm, focused, and unbothered by fluctuations. You don't react to wins or losses with emotion. You're centered in process. Your actions are precise because they're free from internal conflict. You know that no single outcome defines you, and that knowing gives you unshakable confidence. To apply these lessons, Mark suggests a mental practice. Before each trade, remind yourself of 5 truths. 1. Anything can happen. 2. You don't need to know what will happen next to make money. 3. There's a random distribution between wins and losses for any given set of variables that define an edge. 4. An edge is nothing more than a higher probability of one thing happening over another. Number 5. Every moment in the market is unique. He calls these the 5 fundamental truths of trading, and they are the pillars of the probabilistic mindset. Memorize them, repeat them, internalize them until they become second nature. When these truths guide your thoughts, fear dissolves, and confidence emerges naturally. He closes with a powerful reminder that feels almost like meditation. Trading is not about being right or wrong. It's about probability, trust, and execution. The more you believe in uncertainty, the more certain your results will become. In that paradox lies the trader's freedom. When you stop chasing certainty and start thinking in probabilities, you stop fearing the market. You begin to flow with it. You trade with calm precision, detached from the noise, fully present in each moment. And in that clarity, the market finally reveals what it's always been. Not chaos, but pure opportunity. Chapter 8. Working with your beliefs. Everything you experience in the market, your fear, your confidence, your hesitation, your success, stems not from the charts or the price, but from your beliefs. Your beliefs are the invisible filters shaping every thought, decision, and emotional reaction you have while trading. They define how you perceive risk, opportunity, and loss. If your beliefs are misaligned with how the market actually works, no amount of strategy will save you. But if you can understand and reshape those beliefs, you can transform not only your trading, but your entire relationship with uncertainty. He begins by saying that a trader's beliefs are like lenses, colored glass through which they view the market. Two traders can look at the same chart and see completely different things because their beliefs filter what they see. One might believe the market is manipulated, so every sharp move feels like a trap. Another might believe in technical patterns, so the same move feels like opportunity. The market itself hasn't changed. Only their internal lens has. Douglas reminds us that beliefs are formed through experience, often without our conscious awareness. From childhood, we've been conditioned by authority figures, social environments, and emotional events. We learned what to fear, what to chase, what to trust, and what to avoid. Every painful or pleasurable experience left an imprint on our subconscious mind, a belief about how the world works. And those beliefs don't stay in childhood. They follow us into adulthood and into the market. He writes, "What you believe is what you experience. Your beliefs act as a force that shapes the way you perceive information and how you behave." This means that if you believe trading is dangerous, you'll subconsciously seek out confirmation of that danger. You'll hesitate, second guess, and close trades too early. If you believe markets are chaotic and uncontrollable, you'll feel powerless and anxious. But if you believe that markets are neutral and that your edge plays out over time, you'll approach trading with calm and patience. The beauty and challenge of beliefs is that they can feel like absolute truth. You don't question them because they seem real. But Mark encourages traders to challenge those mental certainties. Just because something feels true doesn't mean it is true. Many traders believe they just can't handle losses, but that's not a fact. It's a belief built from past emotional pain. It can be rewritten. Douglas introduces an empowering idea here. Beliefs are not fixed, they are programmable. The same way you learned them, you can unlearn or replace them. But to do that, you must first become aware of them. Most traders never do this. They try to fix their trading results without realizing that the real issue isn't the system or the strategy. It's the set of invisible assumptions running their mental software. He guides us to reflect on our inner narratives. What do you truly believe about losing? About being wrong? About success? Many traders carry toxic beliefs like, if I lose, I'm a failure. Or, if I win, I have to protect every dollar or I'll lose it all again. These hidden ideas create emotional turbulence. The trader becomes reactive, fearful, impulsive, because their beliefs are in conflict with the objective nature of the market. Mark explains that the market doesn't validate or punish. It just reflects behavior. So if your beliefs about yourself or the market are distorted, your results will be too. That's why trading is such a mirror of personal growth. It exposes what's inside you. You can't hide from your beliefs in front of a live market. They show up instantly in your behavior. He introduces the concept of belief alignment. To trade effectively, your beliefs must align with market truths, that anything can happen, that each moment is unique, that risk is ever present, and that outcomes are uncertain. If your beliefs resist these truths, your mind will fight reality, and you'll feel that battle as fear, anger, or confusion. When your beliefs align, however, trading becomes peaceful. You stop resisting uncertainty because your internal model of the world matches the external reality of the market. Douglas gives an example that feels so human. Imagine a trader who believes, I must never be wrong. Every losing trade triggers emotional pain because it violates that belief. To avoid that pain, the trader might move stops, deny losses, or refuse to close losing positions. Their behavior isn't logical, it's emotional protection. But if that same trader adopts a new belief, being wrong is part of the process, losses are data, not danger, then their emotional state changes. They act rationally because their belief supports objective behavior. He says, your beliefs create your reality. Change your beliefs and your reality will change with them. That line is both simple and revolutionary. Mark doesn't just talk about theory, he explains how to actually work with beliefs. The first step, he says, is awareness. You can't change what you can't see. Start by observing your thoughts and reactions. Notice the patterns. When do you feel fear? When do you hesitate? What thought flashes through your mind right before you act impulsively? Those moments reveal your hidden beliefs. The second step is disruption, interrupting those old thought patterns. When you notice a limiting belief, don't fight it, acknowledge it. Say to yourself, this is just a belief, not reality. That acknowledgement creates space between you and the emotion it produces. In that space, you can choose a new perspective. The third step is reprogramming, replacing old beliefs with empowering ones. This isn't about repeating empty affirmations, it's about emotional conditioning. You must feel the truth of your new belief through experience. For example, if you want to believe that losses are normal, you must deliberately trade with proper risk and allow yourself to experience small, controlled losses without emotional reaction. Each time you survive a loss calmly, your subconscious learns. Losses are safe. Over time, the new belief becomes automatic. Douglas explains that changing beliefs is not about force. It's about exposure and repetition. The more evidence your mind experiences that supports the new belief, the more naturally it accepts it. That's why consistent traders practice mindfulness and journaling. They document their thoughts and results, building evidence that discipline, not emotion, leads to success. He dives into a deeper insight here. Your beliefs don't just shape perception, they create self-fulfilling prophecies. If you believe trading is stressful, it will be. If you believe the market is out to trick you, you'll find proof everywhere. But if you believe trading is a mental game of probabilities, your mind relaxes, your actions align, and your results improve. The market hasn't changed, you have. Mark also touches on the emotional healing aspect of belief work. Many traders carry unhealed emotional pain from past failures, not just in trading, but in life. That pain creates defensive beliefs like, I'm not good enough, or I'll never succeed. Those beliefs quietly sabotage performance. Working through them, whether through reflection, therapy, or disciplined practice, is as essential as learning any technical skill. Trading success, Douglas insists, is as much about emotional maturity as it is about analysis. He explains that when your beliefs are aligned with truth, trading becomes effortless. You no longer feel the need to control or predict. You act with confidence, not arrogance, with discipline, not fear. Each trade feels like an expression of flow rather than a test of worth. Douglas's message becomes clear and comforting. Your beliefs are not who you are. They are habits of thought that can evolve. You are not broken or unlucky. You're simply operating from mental patterns that no longer serve you. And the moment you decide to question and reshape them, transformation begins. He closes with a reflection that feels almost spiritual. When your beliefs align with the truth of uncertainty, you will stop fighting the market and start flowing with it. And in that flow, you will find not just profits, but peace. Because the real freedom in trading doesn't come from controlling the market. It comes from freeing your mind from beliefs that keep you trapped in fear. Chapter 9. The Nature of Beliefs. Mark Douglas begins this chapter like a calm teacher inviting us to look inward, not at the charts, not at the numbers, but at the machinery of the mind itself. He wants us to understand what beliefs really are, where they come from, and why they hold such immense power over how we trade and how we live. Beliefs are not just thoughts, they are mental energy, invisible forces that shape perception, emotion, and behavior. They are the roots of every reaction we have in front of the market. He reminds us that every decision, every hesitation, every burst of confidence or panic comes from what we believe to be true about ourselves and the environment we're in. When we look at a price chart and feel fear, it's not because of the candles, it's because of what our mind believes those candles mean. Maybe we've been hurt before. Maybe we lost big. Maybe we equate loss with failure. Those beliefs quietly define how we see everything, even before we realize it. Douglas says, beliefs are the framework through which we experience reality. You don't see the world as it is, you see it as you are. The way you experience the market is filtered through thousands of beliefs you've gathered since childhood. Beliefs about money, success, control, risk, and even your own self-worth. They act like colored lenses. Change the lens and the world changes instantly. He explains that most beliefs are not consciously chosen. They're absorbed from parents, teachers, culture, and experiences. A child who hears, money is hard to make, grows into an adult who unconsciously feels anxiety around wealth. A person raised in fear of mistakes will later fear taking trades. The market, with its uncertainty and emotional intensity, becomes the perfect mirror for all those subconscious beliefs. Mark gives an example that strikes deeply. Imagine two traders entering the same position. One sees it as a calculated opportunity, another as a dangerous risk. They both have access to the same information, but their internal realities differ entirely. The outcome of the trade might even be the same, but their experience of it is completely different. One calm, one terrified. The difference lies not in the chart, but in the belief system behind the eyes watching it. Douglas goes further. Beliefs are not good or bad. They are simply energy patterns that either work for you or against you. Some beliefs support your goals, others sabotage them. The challenge is that your subconscious doesn't judge. It simply acts on whatever beliefs it holds as truth. If you believe you always lose when things are going well, that belief will unconsciously find a way to prove itself true. The mind seeks consistency, even if it means creating pain. He says, your beliefs want to express themselves. They don't like contradiction. That's why change feels uncomfortable. When you try to act in ways that conflict with your old beliefs, your subconscious resists. It creates doubt, fear, hesitation, anything to pull you back into the comfort of the familiar, even if the familiar is painful. The consistent trader learns to push through that discomfort long enough for the new beliefs to take root. Douglas explains that beliefs are stored not as words, but as energy with emotion attached. That's why logical reasoning often fails to change behavior. You can tell yourself, I will follow my stop-loss rule 100 times. But if deep down you believe that closing a losing trade means failure, emotion will override logic every time. You'll freeze, move your stop, or deny the loss, because the emotional belief is stronger than the intellectual one. He encourages traders to approach belief change as an emotional process, not an intellectual one. You must engage the feeling side of your mind. Experience the new belief. Don't just think it. If you want to believe that losses are natural, you must feel safe losing small amounts again and again until the fear dissolves. Repetition creates familiarity, and familiarity rewires belief. Mark introduces a concept called belief hierarchy. Some beliefs sit on the surface, easy to recognize and change. Others lie deep, woven into identity. A belief like, I hate losing money, might be easy to modify with practice, but a belief like, if I lose, I'm not good enough, lives much deeper. Changing that one requires inner reflection and compassion. It might not even be about trading. It could be about old wounds from childhood, competition, or self-worth. Trading brings those hidden beliefs to the surface because it's an arena of constant testing. He writes, the market will always find a way to show you what you believe about yourself. That's why trading can feel so personal. When you overreact, hesitate, or self-sabotage, it's not random. It's your subconscious belief expressing itself. You're not being punished by the market. You're being exposed to your own psychology. Mark reminds us that this is not something to fear. It's something to embrace. Trading is a powerful mirror for self-discovery. It reveals the exact beliefs that stand between you and freedom. When you start seeing your reactions as messages instead of failures, growth becomes possible. Every time you feel emotional pain in a trade, it's not a signal to quit. It's a signal that a belief is being challenged. That discomfort is not the enemy. It's the doorway to transformation. Douglas also points out that beliefs can coexist even when they contradict each other. You might believe you deserve success and simultaneously believe you'll mess it up when you get it. Both beliefs live in your mind, creating inner conflict. That's why traders often behave inconsistently, disciplined one day, reckless the next. The stronger emotional belief wins in the moment. The goal, therefore, is integration, aligning all your beliefs so they no longer compete, but support a single direction: consistency. He offers a practical way to work with this: awareness and repetition. The moment you notice yourself feeling anxious, angry, or euphoric, pause and ask, what must I believe right now to feel this way? That question is like a flashlight shining into your subconscious. The answer might surprise you. Once you've identified the belief, don't fight it, acknowledge it. Then ask, does this belief help me trade effectively, or does it hurt me? If it hurts, decide consciously to replace it. Every time you make that decision and act on it, even in a small way, the old belief weakens and the new one grows stronger. Douglas reminds us that beliefs don't disappear instantly. They fade gradually, as they're replaced by repeated evidence of new truth. That's why practice and journaling are so essential. Each time you execute a trade in alignment with your new belief, you strengthen it. Over time, your behavior changes naturally, without effort. He ties this concept beautifully to the experience of trading in the zone. When your beliefs, emotions, and actions are in harmony with the truth of the market, uncertainty, probability, neutrality, your mind becomes quiet. There's no conflict, no self-doubt, no fear. You act fluidly, like water flowing downhill. That mental harmony is the essence of consistency. Beliefs define our sense of reality, but reality is much bigger than our beliefs. The market is neutral. It's we who give it meaning. To see clearly, we must learn to question everything we believe. That line carries the heart of his message. To trade well, you must evolve, not just in knowledge, but in consciousness. Every belief that once protected you may one day become a cage. The courage to question those cages, to release what no longer serves you, is what separates the average trader from the truly free one. When you finally understand the nature of beliefs, you stop fighting them. You start shaping them consciously. And in doing so, you reclaim the freedom that trading promises, not just financial freedom, but mental freedom. The kind that allows you to look at the market and simply see it as it is, neutral, honest, and full of infinite possibilities. Chapter 10. The Impact of Beliefs on Trading. The markets don't determine your success. Your beliefs do. The charts, strategies, and indicators are just tools, but the lens through which you interpret them defines everything. You can have the most advanced system in the world, but if your beliefs about risk, loss, or yourself are distorted, that system will never work for you. The power of your trading life rests entirely on the architecture of your belief system. He reminds us that beliefs are like silent programs running in the background of the mind. They decide what we pay attention to, what we ignore, and how we interpret what we see. In trading, where every decision involves uncertainty, your beliefs determine whether you respond with confidence or fear. Douglas says, you will always act in a way that is consistent with your beliefs, even if those actions produce the very results you don't want. That sentence holds the essence of this chapter. He explains how most traders think they're reacting to the market, but in truth, they're reacting to what they believe about the market. When a trade moves against them, they don't feel pain because of the movement. They feel pain because of what they believe that movement means. For one trader, a drawdown is just part of the plan. For another, it's proof they're not good enough. The market is the same, but the meaning is different. Mark then takes us deeper into the structure of how beliefs shape perception. Imagine your mind as a filter made up of thousands of small lenses, each one representing a belief. When you look at a chart, every tick passes through those lenses before it reaches your awareness. Some information gets amplified, some gets distorted, and some gets filtered out completely. That's why traders often miss signals that were right in front of them. Their beliefs literally prevent them from seeing what's there. He gives a simple but powerful example. A trader who believes the market is out to get him will subconsciously notice every stop-loss hit and ignore every good entry. The evidence piles up, reinforcing the belief, not because it's true, but because the belief filters perception to make it seem true. That's how the mind maintains consistency. It seeks confirmation, not truth. The trader ends up trapped in a loop, unknowingly creating the very experiences that validate his fears. Douglas says this is why trading can feel so emotional and personal. The market, in reality, is neutral, a constant stream of information. But your beliefs give it meaning, and that meaning determines your emotional response. If you see a losing trade as an attack, you'll feel anger or shame. If you see it as feedback, you'll feel calm curiosity. The event is the same. The difference lies entirely in the belief that interprets it. He makes a fascinating point here. Beliefs not only shape what we see, they also attract experiences that reinforce themselves. If you believe trading is risky and unpredictable, your actions will unconsciously create situations that prove it. You'll overtrade, break rules, or hesitate, leading to chaotic results. If you believe trading is a game of probabilities and discipline, your behavior will align with that belief, and your results will gradually reflect consistency. Mark calls this the self-fulfilling nature of beliefs. The mind wants coherence. It wants reality to match belief. So it shapes perception and behavior to create experiences that confirm what it already believes. That's why traders can spend years repeating the same mistakes. They're not trading against the market. They're trading against their own unexamined beliefs. He writes, "You can't change what you do until you change what you believe." You can learn new strategies or attend seminars, but if your inner belief system remains the same, you'll always revert to old habits under stress. Douglas then explains that the first step to changing beliefs is awareness. Most traders try to fix their trading problems with external solutions, new setups, better indicators, more information. But the real work is internal. You must identify the beliefs driving your emotions and behavior. He suggests watching yourself like a scientist observing an experiment. When you feel fear, hesitation, or frustration, ask, "What must I believe right now for me to feel this way?" That question is a key to the subconscious. He gives examples of common beliefs that sabotage traders. I have to be right. Losses mean I failed. The market is unfair. I can't handle uncertainty. If I'm wrong, it means I'm not good enough. Each of these beliefs injects emotion into trading decisions, clouding judgment and breaking discipline. The goal, Douglas says, is to replace them with beliefs that align with market truth. Beliefs like, anything can happen. Losses are part of the game. I don't need to know what happens next to make money. I'm responsible for my actions, not the market's behavior. My edge will play out over time. He emphasizes that these aren't just ideas to memorize. They must become core beliefs. You must feel them at a deep emotional level, not just understand them intellectually. When these beliefs become part of your mental framework, your behavior changes automatically. You don't need willpower to follow your plan. It becomes natural. Mark explains that the process of belief transformation takes time and emotional repetition. You can't force the subconscious. You must teach it through experience. Every time you act in alignment with your desired belief, even when it's uncomfortable, you send a new signal to your brain. Over time, that new pattern becomes your default. He tells us that this is exactly how professional traders think. Their beliefs about the market are perfectly aligned with how the market actually works. They accept risk, embrace uncertainty, and never personalize outcomes. Because their beliefs match reality, they experience no internal conflict. And where there's no conflict, there's no fear. That's why professionals can trade large size with calm precision while amateurs panic over small losses. It's not about skill, it's about belief alignment. Douglas brings in a beautiful metaphor here. He says your beliefs are like the soil in which your trading mindset grows. If the soil is rocky and full of weeds, fear, self-doubt, and old pain, your growth will be limited no matter how many seeds you plant. But if you clear that soil, enrich it with awareness and truth, your trading psychology becomes fertile ground. Then, consistency blooms naturally. He reminds us that changing beliefs doesn't mean erasing your past. It means redefining it. You don't need to forget your failures. You just need to change what they mean to you. A losing streak can mean I'm cursed, or it can mean I'm learning. The event is the same. The belief determines its meaning. The moment you reclaim the power to define meaning, you reclaim control of your trading life. Mark also addresses the fear that comes with letting go of old beliefs. The mind clings to what's familiar, even when it hurts. That's why transformation can feel scary, because part of you is stepping into the unknown. But he reassures us that the discomfort of change is temporary. The peace it brings is permanent. Your beliefs are the energy behind every trade you take. When that energy is rooted in fear, your trading will always be unstable. When it's rooted in truth, your trading will flow. The lesson is simple but profound. If you want to change your results, you must change what you believe about yourself, about the market, and about what trading really is. It's not a battle to be won. It's a process to be understood. When your beliefs finally align with the reality of the market, its randomness, its neutrality, its endless possibility, fear disappears. You no longer see danger where there is none, or opportunity where there isn't. You see clearly, you trade freely, and in that freedom, consistency is no longer something you chase. It becomes who you are. Chapter 11. Thinking like a trader. Take a moment. Imagine sitting in front of your trading screen. The chart moves, candles rise and fall, and you can feel the market breathing. Mark Douglas says, this is the moment every trader must understand. The goal isn't to control what happens next. It's to learn how to think like a trader. Thinking like a trader means seeing the market as a game of probabilities, not predictions. It means knowing, deep down, that anything can happen. Every trade is unique. Every moment is new, and nothing repeats exactly the same way. You might see the same pattern, the same setup, the same entry. But behind that movement are different traders, different emotions, different reasons. That's why the outcome can never be certain. Professionals understand this truth completely. They don't need to be right. They just need to be consistent. They know that trading is not about winning every time, but about executing their edge again and again over a long series of trades. Their calm comes from acceptance, from knowing that every trade is one small part of a bigger picture. Mark says, most traders struggle because they attach emotion to every single outcome. When they win, they feel powerful. When they lose, they feel defeated. And that emotional swing keeps them trapped. But the professional sees it differently. One trade means nothing. One outcome doesn't define them. The consistent trader feels the same whether they win or lose. Steady, focused, balanced. He compares trading to flipping a weighted coin. You know your edge gives you a slightly higher chance of winning, maybe 60%, but you never know which specific flip will land heads or tails. So you keep flipping without stress because you understand the probabilities will work out over time. You stop trying to predict the next flip. You simply follow your process. That's what thinking like a trader means. Letting go of the need to know what's next and learning to act with confidence anyway. Douglas explains that every trader goes through 3 stages of mental evolution on their path to mastery. First comes the mechanical stage, the phase where you train your mind to follow your rules no matter what. Your only goal here is discipline, not profit, not excitement, just consistency. You enter trades according to your plan, and you exit according to your plan. You teach your mind that following structure feels safe. This is where you build self-trust. Once discipline becomes second nature, you move into the subjective stage. Now you can use your experience and market understanding more freely, but still within the boundaries of your plan. You start to see how price movement reflects emotion, how patterns form and break. You interpret the market with intuition, but you never abandon your system. You're flexible, but focused. And finally, you reach the intuitive stage, the state Mark calls the zone. This is the place where everything feels effortless. You act naturally, without hesitation. You don't second guess or force trades. You see opportunities clearly because your mind is free from fear. You and the market move together, synchronized, calm, aware. Douglas says reaching this level is not luck, it's mental training. You build it by trusting yourself completely. When you accept risk fully, you stop fearing loss. When you stop measuring your worth by results, ego disappears. When you stop fighting uncertainty, the market stops feeling hostile. What's left is clarity, and that's where real freedom begins. He gives a simple but powerful exercise. Commit to taking the next 20 trades exactly according to your rules. No skipping, no impulsive entries, no emotion, just pure process. At the end, don't judge by profit or loss. Judge only by how well you followed your plan, because that's where real confidence grows. Not from winning, but from proving to yourself that you can act without fear. Mark reminds us, professionals aren't perfect, they're consistent. They still make mistakes, but they don't let emotions define them. They see losses as feedback, not failure. Each loss is just another trade in a long sequence. Nothing more, nothing less. He says that when your beliefs align with market truth, everything changes. The truth is simple. Anything can happen. The market owes you nothing. Every moment is unique. When you live by those truths, emotions lose their power. You no longer resist what's happening, you accept it. You no longer judge the outcome, you learn from it. The consistent trader's mind works in harmony with the market. They don't argue with price. They don't hope. They don't panic. They simply respond. When the setup appears, they take it. When the stop hits, they move on. Their energy stays neutral, calm, sharp, alert. Douglas says, when you can think in probabilities, truly accept risk, and act without fear, you will reach a point where trading becomes effortless. That's what it means to be in the zone. That's what it means to think like a trader. It's not about emotionless detachment, it's about balance. You still feel excitement and disappointment, but they no longer control you. You're aware of your emotions, but you don't act on them. You act from clarity, not reaction. Mark explains that when you reach this point, the charts stop feeling personal. You no longer take wins or losses as reflections of your self-worth. The market becomes neutral again, just information, just movement. And that's where power lives. He reminds you that the market will always test you with noise, randomness, and uncertainty. But once you learn to think like a trader, those tests no longer shake you. You stay centered. You trade what you see, not what you fear. And in that moment, trading becomes something different. It becomes peaceful. You no longer chase the market, you flow with it. You don't need to prove anything. You simply execute your edge over and over, knowing that the probabilities will do their work. He leaves us with one timeless truth. Trading isn't about predicting the future. It's about living peacefully with uncertainty. When you stop fighting that, you become unstoppable. You stop forcing the market to behave, and you start behaving like the trader you were always meant to be. And that is the moment you truly begin to trade in the zone. Trading in the zone. When Mark Douglas closes Trading in the Zone, his tone feels like that of a mentor who has quietly guided you through a long journey of self-discovery. The destination isn't a secret formula or a flawless strategy. It's a deeper understanding of yourself. The book ends not with instructions, but with a feeling, the quiet confidence that comes when you stop fighting the market and start flowing with it. He reminds us that trading is not about predicting. It's about aligning your mind with the nature of uncertainty. Every chart, every tick, every trade, they all carry an element of randomness that no one can control. But that randomness is not chaos. It's simply reality unfolding without bias. The market is neutral. It has no agenda, no morality, no memory. It doesn't punish or reward. It just reflects behavior. And what it reflects most clearly is the mind of the trader looking at it. Douglas brings the reader back to the core message that has echoed through every chapter. Consistency is not a skill, it's a state of mind. You don't find it in your system, or in your broker, or in your analysis. You build it inside yourself. You build it by mastering your emotions, by letting go of the need to be right, and by accepting that anything can happen. The moment you stop needing certainty, you gain control, not of the market, but of your own behavior. He writes that the greatest traders in the world don't have magical foresight. They have mental clarity. They don't think of the market as something to conquer. They see it as an environment to operate within. They trust themselves because they've learned to respond to whatever happens without emotional distortion. That's what trading in the zone truly means. Being so aligned with the present moment that fear, greed, and hesitation no longer cloud your judgment. Mark returns to his idea of probabilities, reminding us that trading success comes from a series of events, not single outcomes. Every trade is one of many, just another expression of your edge. A loss isn't failure. It's one data point in a sequence that, over time, will produce profit if you act consistently. The traders who fail are the ones who treat each outcome as personal, who believe a win proves their worth and a loss exposes their weakness. The traders who succeed detach from that emotional weight. They trade with freedom because their identity isn't tied to their results. He talks again about beliefs, those invisible forces that shape every decision we make. All the technical knowledge in the world can't overcome a self-limiting belief. If deep down you believe you're unlucky, unworthy, or incapable, that belief will manifest in your trading. You'll find ways to confirm it, hesitating when you should act, cutting winners too early, holding losers too long. But the good news, Douglas insists, is that beliefs can change. They're not fate, they're patterns. And once you see them, you can rewrite them. Mark tells us that trading is one of the most direct mirrors of our inner world. It exposes everything: our impatience, our ego, our fear, our need for control. That's why so few people master it. They focus on the charts instead of the self. But for those who are willing to look inward, the market becomes a teacher, not of finance, but of awareness. It shows you exactly where you're not free. He writes, The market gives you exactly what you deserve based on your beliefs and your willingness to act in your own best interest. That line isn't meant as judgment, it's an invitation. It means you can't cheat your mindset. The market will always reveal your true level of discipline, acceptance, and emotional control. And every trade is an opportunity to strengthen them. In his closing reflection, Douglas urges traders to stop chasing certainty and to start trusting probabilities. True confidence, he says, doesn't come from winning trades. It comes from knowing that you can handle any outcome without losing your composure. When you accept the risk completely, fear vanishes. You no longer hope or pray for the market to behave a certain way. You simply observe, decide, and act. You respond to reality instead of reacting to it. That's what it means to trade in the zone, to be mentally and emotionally balanced in an environment of endless uncertainty. He makes a powerful point about self-trust. Most traders don't actually trust themselves. They trust their systems, their indicators, or their gurus. But until you trust yourself to act consistently, you'll always be at war with your own emotions. Building that trust requires practice, showing up, following your plan, and respecting your rules even when your emotions scream otherwise. Each time you do, you prove to yourself that you are capable, that you can remain calm under pressure. Over time, that inner proof turns into quiet confidence. Douglas also reminds us that freedom, the thing that draws people to trading, doesn't come from the lack of rules. It comes from having rules and mastering them so completely that they no longer feel like limitations. The paradox of trading is that discipline creates freedom. When you have structure, you can act freely within it. Without structure, freedom turns into chaos. He urges traders to stop trying to eliminate emotions. That's impossible. The goal isn't to feel nothing, but to not let feelings control your behavior. Emotions are part of being human. They become a problem only when they dictate action. Through awareness and acceptance, you learn to coexist with them, to feel fear without obeying it, to feel excitement without chasing it. That's the emotional maturity that separates professionals from amateurs. As the book nears its close, Mark ties everything together with his 5 fundamental truths, the pillars of probability thinking. 1. Anything can happen. 2. You don't need to know what will happen next to make money. 3. There is a random distribution between wins and losses for any given set of variables that define an edge. 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. 5. Every moment in the market is unique. When you live by these truths, not just know them, but truly believe them, trading becomes peaceful. You stop overanalyzing, overreacting, and overtrading. You start seeing the market as a field of opportunity rather than a battlefield of emotion. You act naturally, fluidly, with no resistance. Mark ends on a message that feels more like a meditation than advice. Trading, in its purest form, is an exercise in self-awareness. The market will test your patience, your ego, your confidence, and your emotional balance. It will push you to the edge of your comfort zone until you learn the lesson it keeps teaching: that you cannot control outcomes, only yourself. He writes, "When you can learn to think in probabilities, act without fear, and trust yourself completely, you will reach a point where trading becomes effortless. You will be in the zone. And in that state, trading no longer feels like work. It becomes flow, an extension of your calm, focused presence. The profits are no longer the goal. They are the byproduct of mastery. The real reward is freedom. Freedom from fear, freedom from doubt, and freedom from the mental noise that once controlled you." So when the final page turns, you're left not with strategies or predictions, but with a simple truth that feels like peace. The market was never against you. It was never about winning or losing. It was always about you, your beliefs, your emotions, your discipline, your ability to trust. And once you master those, the market becomes what it was all along, a mirror reflecting the best version of yourself. And that, my friends, brings us to the end of Trading in the Zone by Mark Douglas, one of the most powerful journeys ever written about mastering the mind behind the trade. If you've reached this point, take a deep breath and feel proud. You didn't just listen to a book, you experienced a transformation. You've learned that trading isn't about charts or predictions. It's about your mindset, your emotions, and your ability to stay calm in the middle of uncertainty. If this audiobook inspired you, if it helped you see the market or yourself in a new light, then don't forget to like this video, share it with your fellow traders, and subscribe to the channel for more powerful audiobooks and life-changing lessons. Your support means the world, and it helps keep this channel growing, so I can continue bringing you more deep, motivational, and transformational content. Thank you for listening. Thank you for your energy, and thank you for being part of this journey. Stay focused, stay disciplined, and remember, the market isn't your enemy, it's your mirror. Until next time, my friends, trade with peace, trade with purpose, and keep your mind in the zone.